Welcome to the Deep Dive. Today we're taking a close look at Palantir Technologies, ticker PLTR.
Right. A really interesting one. Is it, the future of AI and data? Or maybe just a complex bet caught up in a lot of hype?
Exactly. Our mission here is to cut through all that noise, give you the essential insights, and hopefully maybe a few aha moments along the way.
We'll unpack the latest news, definitely look at market performance and what the experts are saying, basically distilling the key info for you, whether you're new to investing or just, well, curious about this company.
Okay, let's dive in. Let's maybe kick things off with Palantir's recent performance, which is pretty jaw-dropping.
Yeah, it really has. Think about July 7th. You had the broader U.S. markets selling off pretty hard because of new tariff worries. The Dow dropped significantly.
Right, I remember that. Down like 422 points.
Exactly. But Palantir, it actually gained about 3.5%. It really bucked that trend.
Wow, so what's behind that strength?
Well, part of it is just its overall performance this year. It's got this impressive, 84% year-to-date gain in 2025. It's leading the S&P 500.
84%.
Yeah. So some investors might see it as maybe a defensive tech play, kind of insulated by those unique government contracts it has.
Interesting.
And it even got added to the swing trader list. That's an indicator, based on technical analysis, suggesting strong short-term upward momentum.
Okay. And beyond just the stock chart, they've had some big strategic wins too, right?
Absolutely. On July 8th, they launched something called Warp Speed for Warships.
Okay.
It's with the Blue Forge Alliance, aimed at making U.S. Navy shipbuilding more efficient. Plus, they announced a federal AI alliance with Accenture Federal Services.
Those sound like, well, huge deals, really cementing their government ties.
They are huge. These defense moves, they really underline Palantir's vital role in national security.
Yeah.
And it helped them land on multiple top performer watch lists.
Like which ones?
Well, key institutional leaderboards like the IBD 50, that's a list of the top 50 growth companies. It shows strong fund inflows, institutional buying, and they have a really high IBD composite rating of 99.
99. Out of what?
Out of 99. It's basically a near-perfect score on their assessment of financial health and stock performance.
Okay, impressive. Now, there was also a kind of surprising piece of news, wasn't there, on July 7th?
Ah, yes. The eVTOL thing. Palantir disclosed a passive stake, about 20%, in this startup called Surf Air Mobility, SRFM.
eVTOL.
Yeah.
That's electric vertical takeoff and landing, right? Like flying taxis.
Sort of, yeah. And this was an equity for service deal. What's really wild is SRFM shares surged something like 150% in just 8 trading days after that.
150%. Wow. Okay, is this Palantir being genius with diversification, or is it maybe a bit of a distraction?
That's the question, isn't it? You could see it as Palantir strategically embedding itself in these, emerging high-growth industries, proving its platform works beyond just government clients.
So showing versatility.
Exactly. It implies they're not just selling software licenses, they're trying to shape new ecosystems. It's definitely a calculated risk, but it signals Palantir's ambition.
Okay, so the story sounds great, lots of positive momentum. But let's talk about the price tag, the valuation.
Right, always the crucial part. So, on July 10th, Wedbush Securities reiterated their outperform rating. They even boosted their price target from $140 to $160.
Citing confidence in the AI strategy, I assume.
Precisely. Strong confidence there. That's definitely a bullish signal from a respected analyst firm.
Okay, but isn't the overall analyst picture a bit different?
Yes. That's where it gets tricky. The consensus analyst price target, so the average target from all analysts covering it, sits around $89.32.
$89. But the stock is trading much higher near its all-time highs, right?
Exactly. That consensus target implies about a 35% downside from current levels. That disconnect is, well, it's key here.
A 35% downside according to the average analyst. And then there are the valuation metrics themselves.
Oh yeah, they get even wilder. MarketBeat recently highlighted the challenge of justifying a forward price-to-earnings ratio of over 400 times.
400.
400. It means investors are paying 400 times the expected future earnings per share. For context, that's incredibly high for almost any company. It signals just massive growth expectations baked in.
But they are forecasting growth, right? I think I saw something about breaking $1 billion in revenue.
They are. The forecast is for Palantir to break the $1 billion quarterly revenue mark, but not until late 2025.
So this whole contrast, it really highlights the core debate, doesn't it? Huge potential versus a really premium valuation today.
It's a classic battleground. You've got traditional valuation metrics screaming caution versus this strong belief in Palantir's platform mode.
Platform mode.
The idea that once a company or a government agency starts using Palantir's platform, it becomes so embedded, so indispensable that the revenue is really sticky. And maybe that justifies the premium. But yeah, growth expectations are just sky high.
So, thinking about all this, what are the main red flags? What should you, our listener, be watching out for in terms of risks?
Okay, well, first, there's just broader market risk, right? We saw how trade tensions hit the Dow. Palantir isn't immune to economic shifts or policy volatility.
Makes sense. What else?
Second, that heavy reliance on government spending, it's been a strength. But any contract delays or shifts in government priorities could really hamper their outlook. Their commercial business is growing, but it's not yet large enough to, fully offset a potential government slowdown.
Right. And what about that adventurous stake in Surf Air Mobility, the eVTOL company?
Yeah, I mean, while it offers that strategic optionality we talked about, SRFM itself is still a high-risk microcap startup.
Meaning very small, very speculative.
Exactly. Its success totally depends on its own execution, getting its tech right, and crucially, getting regulatory approvals, like from the FAA. It's far from a sure thing.
Okay. So pulling it all together then, what's the bottom line here for your understanding of Palantir?
Well, look, in the short term, PLTR clearly has some strong bullish catalysts behind it, but it's definitely facing volatility from these macro headwinds.
And medium term?
Medium term, you really want to watch for concrete progress towards that $1 billion quarterly revenue target. And of course, continued big contract wins, both government and commercial.
And long term, I guess it's about whether the big vision pays off.
Pretty much. If that growth truly sustains, if these strategic bets like the eVTOL thing eventually pay off, then maybe, just maybe, the current premium valuation could be justified down the road. But it's a high-stakes game.
So failure is a real risk, too.
Oh, absolutely. Any failure to deliver on those huge revenue expectations or any significant execution stumbles could trigger a sharp downside correction. It's definitely a stock that demands constant attention from investors.
So maybe a provocative thought to leave you with. Palantir really asks you to invest not just in what it is today, but in a grand vision of what it could become. The question is, how much are you willing to pay for that future potential, especially when the price tag is already so incredibly high?